Welcome into the Bitcoin Made Simple podcast. I'm your host, Corey Tusick. I have a special guest today, and that is Joe Consorti with Horizon. But before we get into that, I do have to give the shout out to the BitBox O2 hardware wallet. Joe, I don't know if you have one, but they're pretty sweet and they're pretty easy to use. So I always tell everybody to go to bitbox.swiss/Bitcoin Made Simple. Use promo code Bitcoin Made Simple to get 5% off. And also shout out to Barefoot Mining for all your mining needs. And also, if you're an investor or an energy provider, they're looking to secure the network with you. So, Joe, welcome back to the show. It's been, I think, was it 2025 now? I think it's been 3 years since I consistently did interviews. Like I used to do a weekly one. And I told you at the beginning of the show, I think before we recorded, I think you were the last regular scheduled one. So you must have been such a good interview that it was just like, we can't top that. So I might as well just talk solo for a while.
Yeah, well, I mean, I appreciate the honor of you having me back. This is great. And when you said the last time, I was thinking back, it must have been 2022, which is basically when I got my start in the space. So
yeah,
it's been a while.
I forget what you had some kind of chart or something that you tweeted out that just went viral back in 2022. And so I was like, hey, let's talk about that. I forget exactly what it was. If I was a good podcaster, I would have gone back and researched.
I think it was the time value of Lightning Network. So it was basically a yield curve constructed with different Lightning Network products. And it's funny, now they're actually live. Amboss just launched a product called Rails where people can park their Bitcoin liquidity on the Lightning Network. They handle all of the routing, everything, and then you could get an actual yield for providing a real service. So it's cool. Like the things we talked about a while ago that were just theory are actually happening now.
It's wild how that happens. I mean, even back then I think I had just been recently dipping my toes into Bitcoin mining. And yeah, now I'm like, I could talk to you about it more because this is about your company. I could talk to you more about it offline, but now, doing like huge natural gas mining projects across all these different gas pads. And, it's just, it's funny how that one little miner that you buy, you're like, oh, let's give this a shot. And then next thing you know, it dominates your life. So, it's funny how this world works and how Bitcoin works. So tell us a little bit about this product. Is it your product? You just like representing them, working with them? Like, I want to be clear. Is this like your baby that you came up with, or?
Yeah, so it's all of our babies. Basically this was envisioned around last summertime. And, we look at the kind of untapped pools of capital in the world. And Jesse Myers on Twitter is pretty famous for this at this point, is creating that chart that kind of showed the breakdown of where capital was in the world. You have $450 trillion in bonds globally, and you have roughly the same in real estate. And so real estate is one of the bigger areas that has all of this monetary premium that shouldn't be there, and it's trapped. So there's 450 trillion in real estate globally, or at least thereabouts. And in the United States, there's about $35 trillion in home equity. We're talking residential, that's just sitting there. It's a huge market. It's one of the world's largest markets. And so the existing solutions, if you want to do anything with that, are pretty limited. You can do a couple things. You could take out a HELOC on your house, but that means additional monthly payments in addition to what you're already paying with your mortgage. And chances are it's just going to add to your mortgage payment, especially if you want to draw on a big HELOC, right? For the purposes of something like buying Bitcoin, right? You have reverse mortgages, which again, those are pretty expensive, especially in the early years. And then they stay flat for the entire life of them. Same thing with the HELOCs, right? And the HELOCs also have variable rates. And so the existing solutions for homeowners to like actually take from their home equity and put it into something else that will actually outpace inflation are very limited. Like there aren't a lot. And so what we came up with was basically a method that allows people to swap essentially out of their home equity into Bitcoin. And we could talk about the way that that works. I'm happy to break it down, but essentially brass tacks, we have created and we're offering a method for homeowners to swap their home equity, their dormant home equity, into Bitcoin with no monthly payments, no selling, no additional debt, no refinance, none of that stuff, right? None of the traditional loan terms that you are accustomed to. And it's an extremely innovative solution. I mean, we've kind of taken off like a rocket ship over these last 2 weeks here. I posted something 2 Mondays ago, the beginning of June, that went viral. And it was basically this idea that your home is your biggest asset. You could turn it into one of your best performing ones if there were a way to convert it into Bitcoin. And now there is. And it's extremely seamless. It takes a very short period of time to do this. And essentially, you could turn your home into a Bitcoin treasury. Michael Saylor obviously popularized this with MicroStrategy. Now Strategy, Metaplanet is doing this. These companies are experiencing insane performance in their stocks. And so for people who either they're cash strapped or they're house poor, they don't want any additional payments in addition to their mortgage, but they are, bullish Bitcoin, and they're bullish Bitcoin more so than their home. We've basically created a way for people who believe in that to arbitrage on that belief.
Okay. And so the product, the company is called Horizon. It's joinhorizon.com, correct?
Correct.
And so I got to figure out how this works. Like we can go through, because I always thought too, it killed me that I'm like, man, I put 20% down on my house and I could have just bought Bitcoin with that, like, could you imagine? I mean, I actually even thought about, back in the day when it happened, I was like, what if I do the FHA loan, blah, 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 but then it adds the mortgage insurance and, all that kind of stuff, which can kind of eat away at things. And also it doesn't go away. I'm like, well, all right, I'll just bite the bullet and do the right thing, go 20%. But it does gnaw at me, especially as our house value has gone through the roof.
Yeah. And that trade-off is something that we're trying to eliminate, not to cut you off, but it's like right now, you can't entirely eliminate that trade-off, right? But over time, what our aim is to do is to completely siphon all the monetary premium in real estate into Bitcoin, thereby making home ownership affordable, right? And we're not going to do that alone. We have other people in the space, Battery Finance, chief among them, who's working kind of on the commercial side. We're working on the residential side. And we want to make it so that young people like myself, I'm 24, I don't own a home yet. That trade-off is eliminated. So instead of biting the bullet and putting money down on your house and saying, oh gosh, I could have bought Bitcoin with that, ultimately where we want to head is so that there's no trade-off whatsoever. So the moment you get into your house, you could take a portion of that and swap it into Bitcoin. You can't do that yet. Our LTV won't allow you, depending on how big your mortgage payment is, right? You may be able to, but our LTV, now our max LTV won't allow you to do that. But ultimately, that's where we want to head. And that's what gets me so excited. And I love talking about it.
Cool. So I guess before we get into the brass tacks of how it works, but are you allowed to name like the other partners silent, or can you talk about who else did this with you and how like, I want to know like the bar story of how it came together, or, like were you guys sitting around, one night around a campfire, like, what, this would be a good idea. And then you wake up the next day and you're like, what, that is actually a good idea.
Yeah. I mean, so super high level, basically it came down to one thing, I'll back up. The founding team behind Horizon is largely the same founding team behind Thea. We just crossed 1,000 Bitcoin on our platform, secured on our platform. I'm actively working on an announcement post for that. So that's awesome. And basically we were birthed out of the FTX collapse. So when FTX collapsed, we realized, okay, there has to be something that can be done about this. There's no product that exists that allows people to do kind of these collaborative custody solutions for the Bitcoin super seamlessly and super hands off. And so we basically entered the market because of that impetus. And now basically the way Horizon came to be is we took a look at the overall field and we realized, okay, you have ETFs, you have institutions, you have companies who are all bidding Bitcoin constantly, right? What are the other untapped pools of capital in the world that just don't have access to Bitcoin, right? The ETFs gave access to Bitcoin to these institutions who couldn't buy spot BTC, right? Now they can get one-to-one exposure for it to it by buying one of these vehicles. What are the other areas of trapped capital where people just cannot put it into Bitcoin, at least put it into Bitcoin efficiently? And so we went through, and home ownership, home equity, like the biggest one of the statistics that really blew our minds, and it's still front and center what we're talking about, is that there's $35 trillion worth of home equity in the United States. It's just sitting there. It's rising 3 to 4% every single year. And for you, it's largely doing nothing because you know that your grocery prices are appreciating more than 3% a year. You know that all your utility bills and even your property taxes are going up more than 3% every year. The property tax on my parents' home, on my mother's home, is now like $1,000 a month. It just something completely mind-boggling. And so while your property gets eaten away at by all of these forces, right? The explicit tax of inflation and the hidden, the explicit taxes you pay and the implicit tax of inflation, you're really not getting out ahead at all. Sorry, I just had to decline a Slack from so I'm just going to ping him 1 sec on a podcast. Sorry about that. Very busy on all fronts.
I can imagine.
Anyway, and so basically we saw that statistic and we realized, okay, like what are the existing ways people can draw on their home equity? And so all of us, got together and we found a model that basically allows you to sell a portion of your home's future appreciation in exchange for tax-free cash immediately. And so historically, we're like, okay, why isn't this model more popular? And the reason it's not more popular is because generally there isn't an asset that you can go into that's going to, be higher, appreciate more than the funding costs, right? Of this thing. And particularly, there's no asset that you want to be in for, 10 years, 15 years, 20 years that would make it. So the funding costs of this model are super de minimis. And we'll go into that in a minute, because there's a pretty insane graphic that I want to show that kind of shows how this all works. But then we realized, like, okay, if you plug Bitcoin into this, all of a sudden it makes like an insane amount of sense. It's a no-brainer, right? Being able to basically take whatever you've put into your home up to a certain limit and just swap it into this asset, right? You get tax-free cash immediately. You can go and buy Bitcoin. All of a sudden, this model made sense. And so we immediately looked up if anyone was using this specific model. And nobody was, right? There are other similar companies who are doing something similar, but really what they're offering is a deferred interest loan, right? Which is fine for some people, particularly on shorter time horizons, right? Sub 10 years, sub 8 years. But ultimately, if you're going to be paying 7 or 8% annualized just at the very end in one lump sum cost, that isn't great for a lot of people. And so we found that this model, no Bitcoin company was doing it. Nobody was building this thing to serve specifically Bitcoiners. And so we went all in, right? At the same time that we're building Thea, this company that's now serving advisors and businesses and everyone across the board, we also went kind of full steam ahead on building Horizon. And so building these two companies simultaneously. And, most recently we launched Horizon. So we launched that kind of late last month, middle of last month. And it's a funny story. I was at the Bitcoin for Corporations event in Orlando, and we had just announced Thea for Businesses. So basically, businesses can go and plug and play, and they could assemble their Bitcoin treasury for an extremely low cost. They could do it totally self-custodially, invite team members, all these cool features. I was there to talk about that. And we launched Horizon the same day. And I was obviously straddling both worlds and doing the marketing announcement for both. And the lion's share of people came up to me and said, "Hey, I just heard about Horizon. Can you tell me more about Horizon?" And so basically from day one, people have been extremely interested in learning more about this, and they want to understand what it's all about. Because the idea of being able to take your biggest asset and turn it into your best performing one, take your home equity, the place that you live and the place that you're probably going to stay. If you're a Bitcoiner buying a home, you're probably going to stay there for a while and then put it into Bitcoin, right? That is just such an incredible value prop. And so, kind of from day one that we launched this thing, and we're so blessed. I thank God every day and I pray every night that if this is something that can provide value to people, then he lets me be his hands and feet in order to make that happen. And so far, we're really hitting it off in terms of people loving the product, people joining up, and we've got a tremendous growth path ahead of us.
Nice. Okay. So I need to know how this works because I'm not skeptical. I'm skeptical by nature. So this doesn't mean I'm skeptical of the product or you. I mean, Joe, I've interviewed you before. So, I think at least I know you well enough to know I'm like, well, he's a true Bitcoiner. But I mean, I'm always just skeptical by nature. Maybe that's a Bitcoin thing.
It is.
Because we're always sitting there going like, what's the catch? Which is also why you should get a BitBox, because I have never had a problem with the BitBox. That's my mid show plug, by the way. So I would try to cleverly get it in there. But I really do, like, I honestly only endorse products that I'm like, yeah, like this will not scam you, because we've seen it over the years. I mean, I don't know how long you've been in Bitcoin, but it's like, if at this point, it feels like you could be in Bitcoin for 6 months and you'll have been a part of or witnessed some scam.
Yeah. Any product that sounds too good to be true, chances are it is, unless you talk about what it actually costs. And so that's kind of what I'm here to do largely. I mean, the product sells itself. It's all about explaining how it works, for sure.
Yeah. So first of all, let's talk about how you would get your equity into it. So let's just say, for simple math, you know, I tried to come up with a figure that I was like, you know, American homes range so far, because of, like, you say $1 million home, it's like most people probably don't have $1 million home. So let's just say $500,000 home, and you have $300,000 on your mortgage. So that gives you $200,000 in equity. You know, and I've kind of played with that number on your website, so I don't think it quite qualifies, which also makes me feel better about the product, because
we have a pretty restrictive LTV. Yeah. And that's one of the Bitcoiners being skeptical by nature. I'm skeptical by nature too. And so we spent probably 9 months figuring out A, how to structure this thing, and B, the risks involved, but C, how can we explain this thing and explain every risk associated, so that, you know, our natural immune system as Bitcoiners, which is that's a scam, that's a scam, that's a scam. It may go off initially, but we can explain it, right? We can explain exactly how this works. And so taking that house wouldn't qualify, right? You mentioned, so basically you can draw on our maximum LTV is 50%, right? Sounds very restrictive, but we do that because ultimately we don't want people to overextend themselves way too much. And our preferred partner who we're working with currently is Bitcoin agnostic. And so over time, we plan on potentially relaxing the terms a little bit from where they are now, but currently the maximum LTV is 50%. So let's take this example scenario, and I'll throw a graphic up on screen in a moment after I kind of walk through it. Let's say you have $1 million home, and you have, let's say, a $500,000 mortgage on it, right? So you qualify. We let you take up to 22.5% of that net equity, right? So your home less your mortgage, put it into Bitcoin, right? So you could put up to, you know, $100,000, $1,500,000, $20,000 in cash. You would receive cash. You can go buy Bitcoin with us or with anyone else, and the cash is tax-free. But for easy numbers, let's just say $1 million home, $500K mortgage balance. You draw 100 out in order to stack Bitcoin, right? So those are the numbers we're working with, right? Two big numbers: $1 million home, $100,000 in Bitcoin, right? So essentially, our preferred partner would buy a 10% initial stake in the home, right? And so basically, for every dollar that our partner invests, based on a percentage of the home's current value, we ultimately share at the very end of the process in 2.25 times that percentage upon exit, right? So if that 10%, that over time, that 10% initial stake would grow to a maximum of 22.5% in the property. And because it's maximum, it's capped out at 2.25%, the annual payoff costs, which there is no annual payoff cost, right? But if you took your payment at the very end of it, and you annualize it out into a payoff cost, it would never exceed 12.99% a year. Now, another question that we get, and I'll throw up a graphic for this. Another question that we get is, does Horizon share in my Bitcoin's upside? We do not. Right? Our preferred partner only is interested in the home's current value and the home's future value. So basically, our preferred partner is buying a stake in the home's future value, right? And it's 2.25 times whatever you're investing at the front end, right? So if you do the absolute maximum amount that you could draw on, their stake in the home's future value would never exceed 45%. If you draw on 10%, it would never exceed 22.5% in the home's future value. And so because of that, if you take your final sum that you're paying, and it's just on the house, right? It's not on the Bitcoin whatsoever. You keep all of that. You get it immediately. You can self-custody it. You can do whatever you'd like with it. Because it's fixed at that amount, your annualized payoff cost decreases over time. And so a good way of putting this, and I'll actually put the chart up on screen, just give me a second, is this graphic right here. And it goes through the exact scenario that I just provided. So it's called, it's basically called illustrative payoff cost example. The file that I put up there is 10% payoff.
You need 10%
payoff example.
Can you see it?
Yeah, if you could throw it up on screen.
The one you just added?
Mm-hmm. Fantastic. So these are the numbers that I just walked through, right? $1 million home, 100K contract. You draw out, maximum of right around 20% of your net equity, not the maximum, just below the maximum. And that an annualized payoff cost is about 12.99% until year 8. Beyond year 8, it begins dropping. Because remember, our preferred partner's share in the home can never exceed 22.5%, and it reaches that, or 2.25x rather, of the initial home equity ownership, and it reaches that point at 8 years, right? So you can see here between year 5 and year 8, year 5 and year 10, right around year 8, it reaches that 2.25x. In this example, it's 22.5%. And you'll also notice that beginning in year 8, not shown. So in year 10, the annualized payoff cost on the right side begins falling, right? So it falls to 11.7% by year 10. By year 20, it's 7.26%, which is lower than the national average HELOC rate currently. And by year 30, it's dropped all the way down to 5.82%, your annualized payoff cost, right? And so this is based on a 3% annual home price growth, right? It's absolutely capped out at 12.99%. If the home does better than that, we don't share beyond 12.99%. That would be the maximum annualized payoff cost, because the maximum that our preferred partner will share in is 2.25x your initial investment, the initial amount that you drew out of your home equity, right? And so if you're capped to the upside, right, you're protected on the upside, but you're also protected on the downside, right? Our preferred partner will share in a substantial loss in the value of the home. And that's another great feature of the Horizon product. And moreover, if your home underperforms this 3% figure that we've put into this illustrative example, right? 3% annually, if it appreciates by 2.5% annually, 2%, 1.5%, if your home stays flat, right? Then ultimately your annualized payoff cost is much lower than the figures that are represented here, right? So ultimately, and there's another great graphic to show this, if you want to put on the graphic that says Horizon versus TradFi, a great way to show this is that initially for the first about 5 years, we're right in the middle of a reverse mortgage and a HELOC. So reverse mortgages tend to be more expensive than Horizon initially until 5 years is up, and HELOCs are less expensive. But once you reach about year 8, right, it begins declining. The illustrative funding cost of Horizon, if you annualize the final amount you're paying into an APR, begins declining. And so basically this product is purpose-built for Bitcoiners. It's really a match made in heaven, because ultimately, if you're a Bitcoiner and you own a home, chances are you're staying there for a while. But also Bitcoiners by nature, obviously we're skeptical, but we're also low time preference, right? We're extremely low time preference. And so when we buy Bitcoin, we don't intend on selling it, right? Some people don't intend on selling it ever, but a lot of people don't intend on selling it or even shaving off of their stack until 20, 30, 50 years from now, depending on how young you are. And so with Horizon, essentially, the longer you hold, the longer you stay in this agreement, the cheaper it is for you, the less expensive it is for you over time. That's the way it was designed. And so basically by year 12, and again, based on available information related to other debt financing tools, it becomes less expensive than a reverse mortgage and a HELOC. In this example, based on those numbers, right? By year 15, you're about 100, 150 basis points less expensive than the current rate of a HELOC, using the example we just discussed. And by year 20, by year 25, by year 30, you can achieve a sub 6% rate, right? And so basically, if your bet is a long-term one, and that bet is that Bitcoin will appreciate faster than my home, it's already done that. If your belief is that it will continue doing that, then Horizon is essentially a very cost-effective way of arbitraging that belief. So we've made this chart, we've made the other chart to kind of try to explain how Horizon works. And then this chart is to explain how it stacks up to other tools. And then there's one other graphic that I put in there. It's Horizon versus other options. And it kind of converts what I just showed you in the graph into a table format. So it compares Horizon to a reverse mortgage, a home equity loan, a HELOC, cash out refi, and a personal loan, right? So across the board here, right, Horizon is the only equity-based product, right? So it's not debt. That's the main distinguishing factor. There are no monthly payments with Horizon, unlike obviously a home equity loan, HELOC, or any of these other type of loans, except for a reverse mortgage. There are no income requirements. There's no minimum age, obviously 18 years or older, but there's no minimum age, and there's no fixed repayment term. So one of the other great things about Horizon is that there's no term limits whatsoever. You decide when you settle up, right? And of course, in a situation we just gave you, if your home is appreciating 3% every single year and Bitcoin is just doing what it's doing, you're incentivized to stay in for much longer, right? Because overall, the final amount you're going to be paying is less expensive on an annualized basis. And again, that also gives you the option is if your home is underperforming, you can exit way earlier than you were intending to at a much lower annualized funding cost. And there's no penalty for exiting early because there are no term limits, so you can exit at any time. And so really, it's a great alternative to a lot of these debt-based products that are out there. And so that's why we've made these graphics, and I'm appearing on shows and explaining this as often as I can, in order to kind of tell people what this product is. It's new, it's exciting, it's innovative. And you had mentioned we have relatively restrictive terms. That's true, because ultimately we want to put people at ease. People have been time and again scammed by things like BlockFi, things like FTX, like Celsius, kind of these products that promise you the world and then do not deliver it. We want to be as open and transparent as possible about the risks associated with Horizon, how the product works, and how it stacks up to other things out there.
Okay. So what happens, let's just say you enter into this, like that example, you have $500,000 on your mortgage, $1 million house. You take $100K out. What happens if you sell your house?
If you sell your home, then the contract would close up, right? So basically you can close voluntarily at any time, or you close when you do the following things. Number one, you sell the home, right? And then the contract would end, and we would share at that point in whatever percentage the equity stake has grown to. You refinance, that would close it out as well, or you do a title transfer, right? So those are the three things that would close out the contract. Otherwise, you could just do it voluntarily at any time.
So does that, with me, I look at my home as like a big piece of my sovereignty. And like, I mean, I have many Bitcoiners years and years ago telling me like, don't buy real estate. It's a, shark coin and all that. And I'm like, oh, got to live somewhere. Also, I mean, now I have, if people listen to the podcast, know I have chickens and land and looking to, go the greenhouse route and all that kind of stuff. So I view the home as a level of self-sovereignty. Don't get me wrong. I hate the fact that there's a contract with the bank, because people go, well, like, do you own your home? Even when you do own your home, the government still wants their taxes. So do you own your home? But I think the part that makes me feel a little uneasy is like giving up equity in my home to somebody that I don't know. Does that mean somebody can show up and give you anywhere from an eviction notice to, them putting liens against the property that you have, I mean, it's like, there's like a can of worms there that like, of questions that I could ask. So what's the risk involved there?
For sure. So obviously, like, a home is a big part of people's sovereignty. When it comes to people saying that homes are shit coins, pardon my language, you said kids and shark coin. I'm totally, it's fine. I'm totally with you there. I believe that, homes they're where you live. They're important. They're where you're going to raise your children. They're where you are raising your children. And, maybe one day you pass it on to that, right? Maybe it becomes the family compound, or maybe it is. And so these things are extremely important. And so for people out there who are, leveraging up their home equity, taking out a HELOC, doing all these things, right? There are different risk tolerances, but for the very risk averse, right? Like, what could happen to my house? Could someone come in and serve me an eviction notice? These things that you just asked. The short answer is no, but I'll give some caveats there, right? Because it is important to understand the risks associated, right? Basically, what would happen if you entered into a Horizon contract? The existing foreclosure risk that exists with your mortgage is basically the exact same with Horizon, with a couple of differences. And I would tell people to refer to the website for more information on that. Basically, if you have an existing mortgage, the collateral that our preferred partner takes is a second lien on the home. So we're second to the mortgage. So in the event of, if you have a mortgage, in the event of you not paying your mortgage or the home falling into disrepair, whatever conditions you have with your bank, that's with them, right? And they're largely the exact same when it comes to Horizon, right? the primary risks, right, because we take that second lien, and if you have no mortgage, then it is first lien, is if the home falls into absolute disrepair, right? There are holes everywhere, there are leaks, what have you, right? And you could refer to our website for more information on that. That will kind of outline the foreclosure risk on the home, right? But we wouldn't be able to, basically say, okay, we want out and close out the contract ourselves unless any number of those conditions were violated, right? But they're not too dissimilar from the conditions that you've already signed if you have a mortgage or you had a mortgage before, right? The other thing would be upon no repayment. So if the contract settles up, if you sell your home and then don't repay, or if you voluntarily settle the contract and then don't pay, at that point, that would be when, that second lien or first lien, if you don't have a mortgage, would be activated, right? But essentially, it's what's taken by a preferred partner as the collateral for the loan. And again, for more information, you could visit the website. But to quell those, to ease those fears of, can someone show up to my property and evict me? No, our partner can't do that. Horizon can't do that. We don't have the right to do that unless one of those conditions are violated, right? You don't repay, the home falls into extreme disrepair. So basically, it turns into a drug den or a safety hazard, or those things, right?
Yeah.
But largely, apart from those edge cases, absolutely not. We don't have the right to do that.
And now, by not paying would mean not paying at the end of the term.
Correct. Exactly. Yeah.
Because there's no payments the whole way.
Mm-hmm.
What's the typical term? Are you seeing people typically go 10 years or 30, or, and what's the appetite for Horizon?
Yeah, so because there are no term limits, when I'm taking calls left and right and I'm signing people up, most people are saying that they're entering into this for a 12 to 20-year term. That's usually the sweet spot, right? Because basically who we're serving now are mid to late 30s into their 40s and 50s. Those are the people that we're serving. Ultimately, we want to expand this to serve younger demographics, but for the time being, those are the cohorts that we're serving. And so generally, it is on that longer time horizon. People are entering into this and planning on exiting at the time that it becomes less expensive than all the other options out there, right? That's basically what we're seeing. And it makes sense to me because it lines up directly with the Bitcoin ethos that I spoke about, right? Extremely low time preference. If you're staying in your home and if you have a house and you're a Bitcoiner, chances are you plan on staying it. I mean, it's a meme in the Bitcoin community that, like, nobody look at Zillow, don't look at Zillow, right? Stay humble, right? Mm-hmm. So chances are, if you have a home and you're a Bitcoiner, you're planning on staying it for a very long time. And so those are the people that we're serving. Generally speaking, we're seeing people take out Horizon with the intention of holding on to it, staying in the contract for anywhere from 10 or 12 to 20 years. We've had a few people go beyond that. And ultimately, because there are no term limits, if you're a young person or you have one of your children on the title and you're not doing a transfer, you could theoretically stay in this thing for as long as you want, 40 years, 50 years, right? And ultimately, what that's going to bear, right, should these numbers that I gave earlier remain intact, is just an increasingly lower funding cost until it's so de minimis that it's absolutely a no-brainer.
Okay. Now I have to say I'm looking at, so on your website it says I entered in $1 million with a mortgage balance of 500,000, and it says Bitcoin investment must be at least 20,000. So it's saying I can't get one, or is that am I playing with the tools wrong?
Right. So let me throw up the calculator really quickly so I could show you an example. This is actually a really cool tool, and I like to use it on calls to just kind of illustrate what's happening here. So let me really quickly, let's see this. Bookmarks bar. Let's see. All right. Wonderful. All right. So we're over here at joinhorizon.com. Let's see. We're going to go to joinhorizon.com/calculator. All right. So I just threw in a random home value because I don't want to dox anybody, but I'm going to go ahead and present my screen here. Let's see. How can I set this up? Present, share screen, window, this one. Okay, perfect. So we're in. So this is our calculator tool. and I threw in a random address so as to not dox anyone. Let's say you have $1 million home, 500,000, so you wouldn't qualify, right? But let's drop this thing down to 400,000. And like I said, at the outset, it's relatively restrictive now. We plan on easing these things up in the future. So the maximum amount you'd be able to draw out is 41,822, which works out to about 22.5% of your net equity. You take $1 million, you divide it by, or you subtract 400,000, you have 600,000, 22.5%, right? But just for numbers' sake, let's say this is a home with no mortgage whatsoever, right? For easy pickings, you'd be able to draw out 216,973. The reason it's less than 225,000 is because at the outset, we take a 5% haircut on the appraiser that we send out there just to protect ourselves, right? So nobody enters into the contract, gets the cash, and then immediately exits, right? That's essentially why we do that, just to protect ourselves out the gate. So essentially, let's play with the numbers here. The assumed growth rate that we have in here, and obviously you look at these numbers, this is with these following assumed growth rates. So it's assuming the home is growing 3% a year and Bitcoin is growing 20% a year. This is lower than Bitcoin's 4-year CAGR has ever been. Its lowest it's ever been is 24%. So let's bump it up to 24%. All of a sudden, the numbers look even more favorable than they were before. And you can see down here, the annualized payoff cost being 11.97%. I'm going to drop this back down here and actually extend the term, because the chances of Bitcoin maintaining that 24% CAGR as it grows to a $2.2, $2.3, $2.5 trillion asset are pretty slim. Right? So let's say it drops 800 basis points to 16% over every 4 years, right? Let's now say that you decide I want to stay in Horizon for 20 years, right? If Bitcoin maintains this growth rate and the home maintains this growth rate over 20 years, and these are your assumptions, those are your assumptions, and this is the property value and mortgage balance, this is what you net out at the very end of it, right? In this illustrative scenario. So your annualized payoff cost would be 7.39%. Your future Bitcoin value would be 4.22 million, and your contract payoff would be 903, right? And this is in the situation where you max out. So that 22.5% grows over time by year 8 to 45%. And then we share, our preferred partner shares rather, in that percentage of the future home value, right? Which will be $1.8 million. Let's do a couple of different scenarios here. Let's say that Bitcoin.
Does it show you what the value of Bitcoin is at the end of 10 years?
Yes. Yeah.
So it's 4.2 million per Bitcoin?
Correct.
Or is that the amount?
Well, no, this would be the projected Bitcoin investment value. So the amount of Bitcoin that you put in, right? So if I change this to 100,000, then it would change this, right? But let's say we max out here. And that's what it basically shows you. It shows you after 20 years, if you adjust this, that automatically adjusts in real time. The Bitcoin that you purchased at the outset would be worth 4.22. The future home value would be worth 1.8.
It implies price of 2.04.
Correct.
$2 million in 20 years.
Exactly. Yeah. Let's say the home doesn't do as well as 3%. Let's say we do this for a 10-year term, right? Where we have a little bit of a shorter time horizon, pun intended. And let's say the home doesn't do as well. We experience some kind of crash in the housing market. Let's say it does, and keep your eye down here on that 11.97%, right? So let's say it does 1.5% instead. All of a sudden, your funding cost drops, because remember, the ultimate payoff cost, the very end of the term, is solely determined by the future home value, right? And so if your home stays flat, or even if, let's say over 10 years, something happens in the real estate market that just nobody can predict, and it's actually down by 2% annually, that crash, whatever it experiences, is down by 2% annually come 10 years from now. Your $1 million home is now worth $817,000 in 10 years. Something happened to it, right? Whatever it is. And you decide to close out. Bitcoin maintains that 16% average annual growth rate over the next 10 years, right? Then this is what your numbers would look like. And this is what the annualized payoff cost would look like, right? And so really on a case-by-case basis, obviously broadly, the aim is that we see Bitcoin appreciating faster than housing. We give homeowners a way to act on that belief, right? But on a case-by-case basis, it allows homeowners who believe they're in a market that won't do very well or has stayed flat, and they're seeing their home equity just get eaten alive by property taxes and inflation and a market downturn, to act on that belief, right? And so even if you go for a shorter term, but you think your home isn't going to do very well over the next 10 years, this is a way that you can act on that bet and reduce your overall funding costs, right? Let's bring this back up to the standard situation and kind of put this where most people are choosing to use Horizon, right? Over that 15 to 20 year term, right? When it becomes less expensive in the example I gave you earlier, based on rates that are readily available for HELOCs and reverse mortgages, where it becomes less expensive than those options, right? In that situation, your annualized payoff cost will be this. The contract payoff will be this. Your future Bitcoin value of that 216 that you put in at the outset would be this, and your net investment returns would be this, right? So it's
So
a pretty...
what's the growth rates here? This was just the standard growth rates?
Correct, exactly. I just reset all these to the standard growth rates that we put in.
Okay. So you're looking at on a $1 million house, you get, with no mortgage, you get $216,000 in a check right now. Your payoff in 15 years is $778,000, but the value of that Bitcoin, if you bought all Bitcoin with it, should be 3.3 million.
Correct. Based on these numbers, yes.
Okay. Now what happens? Now here's me being super skeptical.
And it's good. It's good.
Everybody goes like, "Oh, Bitcoin's going to the moon." What happens? Say home rates continue to grow at this level, but for some reason or another, Bitcoin grows at 1%. What does it look like?
So that would be the primary risk to the homeowner, right? Let's say over 15 years, for some reason, Bitcoin only grows at 1% a year, right? Right now, Bitcoin's price is $105,200. And that would mean Bitcoin's price is at 121K in 2040, which is doomsday scenario for Bitcoiners, right? That would be the case in which this would be a loss for the homeowner.
A loss that's not realized until
you decide to settle up, right? So the two things that you could do, right, is you could, obviously, this is doomsday scenario, relatively low likelihood in my mental model this would happen, but I want to be transparent about the risks. A couple things you could do. If you decide, hey, I want to do this for a 10-year term, all of a sudden, Bitcoin's doing great. It's maintaining its, 20% CAGR, right?
Mm-hmm.
But for one reason or another, in the year I decide to settle up, it tanks, right? And that brings its price down from 650 grand in 2035 down to 462 grand in 2035, right? Or even lower, right? Let's say, all of a sudden it drops 60%, as Bitcoin is sometimes known to do.
Known to do.
Exactly. You could choose to ride it out, right? You could choose to ride it out. Let's say you ride it out another 2 years. Let's say you're in the bottom of that bear market and you decide to ride it out into the bull 2-3 years ahead of time. So I bumped it up to 12 years. And let's say Bitcoin recovers from that. It goes from its 650 to 764, right? And again, these are illustrative numbers, right? Let's say it recovers from its crash from 650 down to 280 or 270, gets back up to its next, bull market peak of 764. This is about 3 Bitcoin cycles from now, right? If it maintains that 4-year cadence, right? In which case you recover, right? Mm-hmm. You recover. And so ultimately, like Bitcoiners who are kind of used to weathering the storm, that's basically the exact same thing you would do here, right? You would simply wait for Bitcoin's price to recover. Obviously, you can settle and eat the loss, but ultimately, I think anybody who would be joining Horizon, right, and the people we've had join up so far are incredibly bullish on Bitcoin, right? But the primary risk to the homeowner is that it doesn't do well at all. One of the other cool things we could do here is that you could set a target price. So if you have a mental model where instead of an annual growth rate, a percentage, you could set a target price. So let's say 2035, I expect Bitcoin to be, $1 million a coin. Implies BTC price of 764. I think it's going to be $1 million a coin in 2035, right? In that situation, that would be an annual growth rate of 20.7%. Let's say, or 2037 rather. Let's bump this down to 10 years, excuse me. And then I'll put that $1 million number back in there. Right. So that implies an annual growth rate of 25.3%, which is a little lower than Bitcoin's 4-year CAGR now. I think it's 30% now. And basically, like, however bullish you are on real estate and Bitcoin, you could go in here and play with these assumptions and figure out something that fits for you, right? If you think 10 years from now, like, yeah, over the last 10 years, my home went from 700 to $1 million, I think it'll probably do the same thing, right? What you could do in here is go in here and play with those assumptions to say, all right, that's what my home is going to be. I'm uber bullish Bitcoin. I'm hyper long Bitcoin. I think it'll be $1 million in 10 years. You could plug those assumptions in and see what you'd be able to net. And of course, this Bitcoin investment, the cash that you receive that's wired to you at the outset, if you decide to join Horizon, is tax-free. And obviously, the Bitcoin won't be taxed unless you decide to sell it. And so this ultimate contract payoff, one of the other cool things is that you could pay it however you want. You could take a slice of your Bitcoin holdings. Obviously, this is netted out between the future Bitcoin value and the contract payoff. But ultimately, you could choose to pay this however you want, and have that cash doing something else in the meantime. So let's say instead of taking out a second mortgage on the home or taking out a personal loan on the home, you instead decide to deploy that cash into a high yield savings account, right? And so, let's say you have $200,000, $300,000. Instead of using that to go and stack Bitcoin today, that $200K, you could throw it into a high yield savings account where you will not get taxed, right? You will not get taxed when you take that out and you decide to do your contract payoff. So there are a number of things you could do, and kind of the freedom that we allow with the no term limits, and you could pay us in wherever the fiat comes from, right? It could come from your Bitcoin holdings. It could come from elsewhere. What we're trying to build and what we believe we've built is one of the most flexible options, if not the most flexible option for homeowners out there who are sitting on a lot of dormant equity. They believe their home isn't going to do very well, at least compared to Bitcoin, and they want to arb that bet. I've said that a million times over the show, I know. But that's essentially what we're getting at here and what this product is designed to do.
Okay. So sorry, I'm sitting here trying to wrap my head around it. It's like a million questions coming, but
yeah.
So really the risk is, I mean, like for anyone that's been in the Bitcoin space for a period of time, it's like, if you remember in 2021, like if it might have, if you were brand new in 2021, it might have felt like, whoa, like, this is crazy. What's happening? But if you'd been there for at least a minute, it was like a given that we were hitting 100K.
Yeah.
Like it was no doubt. No doubt about it. We're hitting 100K. Everything is going to be fine. And, and by the year 2025, oh man, like, I mean, at least $1 million, like that. So like, and I will admit, I was in that. I actually had, Mags. She used to be Crypto Mags. I forget what her actual handle is now, on Twitter, but she was on the show and she was the first person that kind of like held me on like the skeptical side. It was right before Bitcoin 2022. And she was like, maybe it'll be 100K, by conference day. Cause everybody was like 300K by conference day. And no, it was 2021. And I was like, I think it's going to be like, it's definitely gonna be 100K. What do you mean maybe 100K? And here we are in 2025 at $105,000.
Yeah.
So I just always I preface it with everybody. I always tell them, don't risk more than you're able to afford. I guess the benefit here is that you're kicking something out way down the road. Like you're potentially kicking it out 30 years. So if you kick it out 30 years and you have what's the I can't see at the bottom of the screen there.
Yeah, so this implies a Bitcoin price of $1.8 million in 30 years.
And $1.8 million.
And this is for a lot of Bitcoiners, it's hyper conservative, but yeah.
And you're getting $216,000 in cash now, but that means in 30 years you owe 1.2 million. Or what happens then? Like the person owns the house. If you can't pay it, is there a term in there that says they get the whole house?
Yeah, so you can refer to the website for basically what happens if you don't pay at the end of it. Yeah. And of course you can go longer than 30 years, right? You could settle up whenever you'd like to. But in the event of non-payment, we have some more info here in our FAQ section and in our terms that people can read.
Okay. And then can you change the terms as things go? So you can settle earlier. But like, let's say you said a 10-year rate, but like you said, you're in a bear market and you're like, you know what, can I extend this out to 20?
Yeah.
Is
So
that
because there are no term limits, there are no term limits in the contract. And so it's not, it's the reason I gave that answer of like 12 to 15 years, some people going 20 years, is because that's what I'm being told, right? When they decide to join Horizon, right? But ultimately, it's the homeowner's prerogative. It's not inked when they decide to settle. And so if they come in intending to do it for 10 years and they exit in 5, they can do that with no penalty. If they, they need to sell the home, they have too many kids and they need to, they can't add on, they want to move somewhere else, they can do that. Not too many kids, excuse me, as if it's a bad thing, but too many kids to fit in their existing home. Right?
Oh yeah, no, I've done that.
Yeah. And so it's like, or, if you're in a bear market and you said initially, like, I want to do this thing for 10 years, but then you decide, okay, we're in a bear market. I want to hold it out for another 5, see what Bitcoin does. You ride it out. Bitcoin does better. You don't have to go back in and change anything. Right. It's
Well,
basically,
wouldn't the investor want to say, hey, no, you said 10 years. I want the money now.
no. So in the contract itself, there's no term limits. Right. So
On
the
either
investor,
direction.
correct. Yeah.
So if you say you get to a position where you can't pay, you just let it ride.
You could let it ride. You could close out and eat the loss. You could do whatever you'd like. Yeah. But I mean, if it were me, I would certainly let it ride. Yeah.
Yeah. But so like, you're never going to be in a scenario if you go through this model, you're never going to be in a scenario where the investor is coming and saying, hey, like, I need that money now. Like, I'm calling the loan due.
Correct. Yeah. You'll never be in that scenario. There's no liquidation risk on the Bitcoin. There's no price related liquidation risk or foreclosure risk on the home. And there's no price related liquidation risk on the Bitcoin. Yeah. You'll never be in that situation. Of course, there's other risks associated with it, right? I don't want to say there are none, right? Of course, the foreclosure risk that I mentioned earlier, and for more detail on that, like exactly what would kick that into gear, you could look at our terms, but they're not too dissimilar from just any standard foreclosure risk you have in a mortgage.
Okay. And where's the benefit then for the investor that is supplying the capital? Because, he could be holding on to a contract that when I get to 30 years from now, I'm like, you know what? Let's kick it another 30 years. This house is going to my kids and, they'll just assume it. And, I'm going to live in the basement and they'll, throw me a meal every once in a while. But we're going to kick this out another 30 years. It's like,
Yeah.
With there being no term limit, is that a downside for the investor where they could be going like, oh crap, we're trapped in something forever?
So our important context is that the home equity investor on the other side of this, they essentially just want to long real estate. That's the exposure that they want, right?
Okay.
And so that's why, the no term limits for them is favorable, right? They're going to have some contracts that settle in 5 years and then they'll get their proceeds then. And there are some contracts that are going to settle in 30 or 40 or 50 years. But the idea is that the investor on the other side is long real estate. And so basically we've paired, this is kind of a match made in heaven. We've paired Bitcoin agnostic real estate investors with real estate agnostic Bitcoin investors who want to stay in their houses. We've married those two and we've created this product. Right. So that's why they're incentivized. And the no term limits is baked into the contract because they're long the real estate. And that's what they want the exposure to. They're willing to ride the waves and they're willing to allow the homeowner to settle whenever. Right. The scenario you mentioned, like passing it down to my children, any title transfer would close the contract out. Right. And so even though there are no term limits, obviously you couldn't do something like 100 years. Right. Or even something like 60 years. Right. That may be a little bit less possible unless the kids are already on the title before you enter into a Horizon contract, right? But for full details on what would constitute a title transfer, you can check out our terms and conditions.
Yeah. So I guess I would assume then that kind of answers the question of, let's just say, I hate that you never want to think this way, but I had friends in high school who, lost both their parents in an accident at the same time. So, in that scenario, there would be a title transfer to the kids. And would that mean that the contract would come due?
Sorry, could you repeat that last part? Sorry, something happened over there. I had to
No,
ask.
that's okay. So if you have, if something happens to me and my wife, God forbid, the house would then go to our kids. But that would technically be a title transfer, I guess. So would that mean
Correct.
that the loan would come due at that moment?
I believe so. Yeah. Yeah. And again, you could check out and you could jump on a call with us for detail if anyone wants to know the answer to that situation. But yes, a title transfer in that event would likely close up the deal. Yeah.
Okay. So I guess a way to protect against that would be put your kids on the title ahead of time.
Of course. Yeah. Yeah, absolutely. And then obviously, as with any Bitcoin holdings, leaving a treasure map for inheritance purposes is so important. And particularly with Horizon as well. Wherever you end up storing the Bitcoin that you purchase, you want to be able to leave whoever you're leaving the Bitcoin to a treasure map as to how to access it, right? In a multi-sig, for example, or even in a single sig, right? Where you destroy the device and you only have the seed phrase, some kind of treasure map should be made. So that way, in the event of some unforeseen circumstance, like what you just described, your kids would be able to figure out how to access the Bitcoin. And of course, in that scenario, we'd be extremely hands-on. Our partner would be extremely hands-on in figuring this out with you, right? I don't imagine a situation where, we'd be knocking down the door. Our partner would be knocking down the door to be paid back, right? In a situation like that, in an edge case, we'd certainly be extremely hands-on.
Now, a couple more questions, I promise. I mean, I could ask you 2 hours, but I know your time is precious. So this isn't a scenario where we're going to have an FTX level situation where we're going to have, like, who custodies the Bitcoin, I guess, is the biggest question.
Yeah, so you custody the Bitcoin. It goes straight to you. So the cash is wired to you, and then you could do whatever you'd like with it. It's pretty nice. So, you could go and throw it in a multi-sig. You can put it on an exchange, whatever you'd like to do. It's yours. And obviously, as Bitcoiners, not your keys, not your coins is kind of baked into our DNA at this point. And so you can really do whatever you like with the Bitcoin that you purchase. You could buy it with us. You could wire the cash to you. We basically have an integration where you could buy it at a pretty low spread, right? Industry standard spread. Or you could go and buy it elsewhere. You could take the cash, buy Bitcoin OTC, go put it onto River or Coinbase or whatever. But that Bitcoin that you purchase with the money you're given at the front of the contract, that's yours. Yeah.
Okay. I guess the only other big question I'd have would be, I mean, because like you mentioned BlockFi and all those things ahead of time that we've lived through. I remember Peter McCormick talking about buying, what was the car that he wanted to buy? Was it like a Maserati or some kind of ridiculous car that he was like, I'm going to buy this, a Bentley maybe. And he was like, I'm going to buy it with a loan against my Bitcoin, which obviously he's putting it in somebody else's custody. So like, we're not doing that in this scenario.
Yeah.
But I remember there being a conversation, who knows, it could have been on a Twitter space. It could have been wherever, or it could have been with somebody from BlockFi. Actually, I don't remember. But the conversation being something like, well, the car term, the loan for the car is 5 years. So if BlockFi is not around in 5 years, then we've got bigger problems or something like that. And it's like, well, that happened. So what, and I'm not telling, like, this sounds like a good product. So I'm not insinuating in any way, shape, or form that Horizon will not be around in 30 years.
But you need to plan for those risks. 100%.
Yeah. So what happens if somebody does a 30-year term with you and for some reason Horizon goes down? Where does that contract go?
Right, of course. I mean, as with any other company like this, and it's tough to draw analogies, but as with any other company like this, chances are if something happened to Horizon, well, the first thing is those contracts that are financed by our partner would just go to our partner, right? And nothing would happen to the contract. If something happened to them, then it'd be a bit more tricky, right? Chances are that contract would be inherited by whoever bought them, right? Because when a company goes down and they're writing these types of contracts, whether you're a bank or some other kind of financial institution, Horizon is a tech company, right? I'll be clear, Horizon's a tech company. But essentially when that happens, the contracts get inherited by somebody else, right? So I do not imagine a world where things would immediately become due. But again, I would read our terms and conditions to see what would happen in the event something happened to Horizon or our preferred partner. You can go to their website, linked on our website, in order to learn more about that. But one thing I also
known, they're not like a
correct. Yes. Partner. Nope. Cornerstone Financing. You can look them up. You can go to chiefs.com, not spelled the normal way. Chiefs with the I and the E swapped. You can go to their website, read their terms and conditions about what would happen to them. And one thing I'll tell you is that with Thea, and again, the Horizon co-founding team is largely the Thea co-founding team, is that we've baked into Thea backup plans on top of backup plans on top of doomsday plans, right? If something happens to your keys, if something happens to Thea, what do you do, right? We've built in all of these doomsday scenarios right into the product. So it's the exact same thing with Horizon, right?
Yeah.
Homeowners, we want to make sure they're taken care of end to end, and we're doing everything in our power to make sure of that. But for more detail on exactly what can happen there, you could read our terms and conditions or our partner's terms and conditions or schedule a call with us so we could talk to you one-on-one.
Okay. Well, Joe, I appreciate you coming on. Could you tell people where to find you? And obviously you can, again, drop the link on, where they can find the information on Horizon.
Of course, yeah, you can find me at Joe Consorti on X, just the same way that the handle is spelled up on screen currently, or you could go to joinhorizon.com to learn more. That cool calculator tool that I showed you, you could plug in your own home, check your assumptions. We're now live across 17 states in the United States. We're planning on expanding to all states where we're eligible over the coming weeks and months. So keep an eye there, see when we're live in your state. And if you're interested, you can go to that calculator tool, book a call with me, and I'd be happy to walk you through the process and see if we could help you out.
Yeah. I was trying to mess with that calculator. I didn't know that you could put your address in there. I don't know if I'm just dumb and like a caveman and missed that in the step. And I was sitting there playing. So I was literally like, I was just playing with numbers, sitting there going like, well, what would a $2 million house look like? But yeah, no, I think it's very clever. I have to do more investigating, but this was thorough and I appreciate it. And if you do decide to do your own research and go to Horizon, I would recommend you get a BitBox O2 hardware wallet and put it on there. But all right, well, thank you guys, and we'll talk to you later.